Kia ora everybody, my name is Misha Peters and I am the Director of Assurance here at the XRB. It is my absolute pleasure to welcome you all today to our deep dive on the revised standard on auditing service performance information. I'm joined today by my colleagues Lisa Thomas, the Senior Project Manager in the Assurance team, who's been leading the charge on revising the standard, and we're also really pleased and grateful to Jamie Cattell, who's joined us from the accounting team, so we can give you a nice overview of how the two requirements and standards are working together. Just a few housekeeping suggestions. We will be sending out a copy of these slides to all of those who attend today and register for the event, but we'll also make these slides available on our website following today's webinar. This session is also being recorded, and the link to that recording will also be made available through our website. We do have a busy agenda today, but we will hopefully leave some time for questions towards the end. If you do have questions, we encourage you to pop those in the Q&A or the chat using the two functions available to you, and we'll do our best to get through most of those towards the end of the session. If we don't have time, if we run out of time, we'll endeavour to get back to you after the event. So exactly what are we going to cover today? We are going to walk you through three things. Firstly, some transitional requirements. So we're aware that auditors are already auditing service performance information. We'll walk you through how to get from what you are doing currently to where you need to be to the revised standard. Lisa's going to cover the benefits of the revised standard and then walk you through the key audit process steps from planning, our two-step audit process, materiality considerations, right the way through to reporting. So we really hope that we thank you for joining us today. We hope you enjoyed today's session. And without further ado, I'll hand you over to Lisa. Thank you. Oh, actually, I think I might be handing over to Jamie first. Sorry, my mistake. Jamie first.
Right. So thank you, Misha. Yes, and as Misha mentioned, I am Jamie Cattell. I'm a project manager in the accounting standards team. And my goal here for this slide is to give you an overview of what service performance reporting and service performance information is and why it's required. Service performance reporting is required for most PBEs that have to follow XRB standards in some form. PBEs, or public benefit entities, are those entities whose primary objective is to provide goods or services for community or social benefit rather than to provide a financial return to the equity holders. For example, that means we're talking about things like registered charities or schools or hospitals, local government, those kinds of entities. And because they exist to fulfill a social purpose, service performance reporting is critical. It helps them demonstrate their accountability and their effectiveness to their stakeholders, their funders, their donors, service recipients, but most of all the public. And it allows them to do this by giving them a place to communicate their achievements and challenges and the impacts that they've had from their activities. And providing this service performance information in the same report as general purpose financial reports allows them to present a more complete, more balanced picture of their performance for the year. So at a high level, how is it that service performance reporting achieves that? It does it by requiring these entities to report on three main things. One, why the entity exists. What's the overall purpose it was set up to achieve? What does it actually intend to achieve more specifically over the medium to long term? And how does it go about doing that? And finally, what specifically has it actually done during the period it's reporting on in working towards those medium to long-term aims and objectives? You'll see that the picture that I've got on the slide here is of the cover of PBE FRS 48, which is the service performance reporting standard that's applicable for Tier 1 and Tier 2 PBEs. But I will highlight that we've recently issued a new version of the Tier 3 and Tier 4 standards. And the Tier 3 standard in particular is what I want to focus on, because we've brought a lot of the requirements from FRS 48, the concepts, the way they've been expressed, and aligned that in the Tier 3 standards. So you'll see a much more consistent discussion of service performance reporting across the suite. But that is, in a nutshell, what service performance information, service performance reporting is. So I'm going to hand you back to Lisa to dive into the auditing side.
Great, thanks for that, Jamie. That's really great fun having the setting the scene for today's presentation. So I appreciate you joining us. So before I get into the auditing standard, I thought I'd just like to give you the opportunity to share with me a bit about yourselves. So I'd just like to do a poll, please. So the first question on the poll is, what engagements are you performing that covers service performance information? And then what types of sectors or entities are you performing those engagements in? So if we have any preparers joining us today, then if you could just answer the poll based on the type of entity that you're preparing the information for and whether that information has been prepared for an audit or review, that would be great. Thank you.
I'll allow a few more seconds to give us your feedback. Thank you. I'm going to end that poll and I'm going to share the results. So as you can see, a majority on the call are doing audits, but there's also a high percentage conducting reviews of service performance information. It's really helpful for us because we're also thinking about the standard for reviews, so that's really useful to see. And there's also a good mix of public sector, not-for-profit sector, tier 1, 2, 3. So yes, we've got a great mix on our call today, which is fantastic.
Great, thanks everyone for doing that. It's awesome. Okay, so let's get into it. So in July, we issued a revised auditing standard for service performance information, which is the focus of today's presentation. I've included here on this slide a link to where you'll find the revised standard NZAS1 revised on the XRB website. And on the other side of the slide, you'll see a link to the basis for conclusions. So for those of you wondering what that is, that's actually a document that explains the key decisions we made following the consultation for the exposure draft. The standard is mandatory for periods beginning on or after 1 January 2024, and it's at that time it will supersede the existing standard for auditing service performance information, extant NZAS1. So before I take you through the transition options, I'd like to do another poll and just find out what standard you're currently using to audit service performance information. So the options here on your screen is ISA NZ 3000, NZAS1, the extent standard, or NZAS1 revised, or AG4, the audit of performance reports. So I'll just give you a moment to do that, please.
More seconds, last chance. Right, some interesting results to share there. So a real mixed bag. It seems everybody's doing different things, which is in line with our expectation. It's really good to see some eager beavers already using the revised standard, Lisa.
Yeah, sure is. Okay, so let me take you through the transition options. So if we can just have the next slide, please, Bruce. Great, thank you. So if you're doing audits in the public sector, you'll need to follow the standards for the Auditor General, so the Auditor General's auditing standard. The good news is the Auditor General has confirmed to us that the revised auditing standard will form the basis of the standard for the public sector. So I encourage you to keep an eye on the Auditor General standards if you're working in the public sector. If you're working in the not-for-profit sector, we're aware, and as we just saw on the poll there's a range of activity at the moment. So we wanted to create flexibility for the practitioners. So until the standard applies, practitioners will have the flexibility in which standard to apply to audit service performance information. So the transition plan will enable auditors, practitioners to move from the standard that they are currently applying and transition directly to NZAS1 revised. So for example, if you're one of the people who are currently using ISA NZ 3000, you don't need to transition first to NZAS1 and then again to NZAS1 revised. You can just go from 3000 directly to NZAS1 revised. Or if you've voluntarily early adopted Extent NZAS1, you can move directly from that to NZAS1 revised. The third option you can see here on the screen, and as we saw on the poll, is you may wish to or already voluntarily early adopting NZAS1 revised. And so you may be wondering what the relevance is of the date, the 24th of August 2023. So standards issued by the XRB take legal effect 28 days following the publication or issue. So the standard was issued on the 27th of July, so that takes effect 28 days later, which takes us to the 24th of August. As the XRB standards can't be applied retrospectively, what that means is the accounting period in relation to which NZAS1 revised is being applied cannot have ended prior to the 24th of August 2023. It can still be within the accounting period, including the 24th of August. It just may have not ended prior to the 24th of August. So I know this is quite a bit to take in, and it's perhaps a wee bit different to what you're used to. So we've developed some guidance on this as an FAQ, which is available on our website on the same page as you'll find the standard, which I provided the link earlier. So hopefully that will clarify for you what you need to do next if you have any further questions on that. So let's take a look at why we changed the standard and the benefits we see in the revised version. So firstly, why did we revise the standard? We heard concerns from the Office of the Auditor General that the Extent standard NZAS1 was not fit for purpose for the public sector. So we convened a working group which consisted of representatives from the Office of the Auditor General and other practitioners, and they worked alongside the XRB in revising the standard to make sure that we had a standard that was going to be fit for purpose for both sectors. The good news is, and a key benefit of issuing the revised standard is, as I was saying earlier, we have had confirmation from the Office of the Auditor General that the revised standard will form the basis of the public sector auditing standard. Another key benefit is that the standard has been aligned with the language and requirements used in the financial reporting framework. So an example of this is with the recent changes in Tier 3 reporting requirements that Jamie was talking about earlier, adopting the term appropriate and meaningful, it's mean that we can also adopt this in the auditing standard. So instead of evaluating the suitability of criteria, the auditor is now to evaluate whether it is appropriate and meaningful. So this is a key change in the standard for those of you who are voluntarily early adopting Extent NZAS1. You'll see when I take you through this concept shortly that although the terminology has changed, it hasn't actually fundamentally changed how you will evaluate the service performance information. It will, however, require you to update your resources, such as engagement letters, audit reports, the templates for those, for this change in terminology. What we've also done is replace the technical audit terms with plain language and examples, and have received feedback already that the standard is easier to understand. So one of the key changes is that we've replaced service performance criteria, which is used in Extent NZAS1, with a description of the 3 layers that the auditor may consider when evaluating whether service performance information is appropriate and meaningful. Again, this change in terminology is a key change from between extant NZAS1 and NZAS1 revised, and so will need to be updated in your resources such as your engagement letter templates, representation letters, etc. So let me take you through what I mean by the 3 layers. Let's have a closer look at that. So instead of referring to service performance criteria, it's described as 3 layers using plain or simple language. So the first layer is the elements or aspects of service performance that the entity has selected to report on. The second one is the performance measure and or description the entity has used to report on what the entity has done in relation to those elements or aspects of service performance information. And then the third one is the measurement basis or evaluation method used to measure or evaluate those performance measures or descriptions. I just like to think about this as how the measure has been measured. So I'll give you an example that we've provided in the standard on this. So if we take a look at the element or aspect of service performance information, this could, for example, be for an entity perhaps providing safe drinking water. So a performance measure or description that they may choose to report on could be that 100% of drinking water is safe. Sounds pretty good to me. And then the measurement basis or evaluation method. Well, this could be a number of things. It could be the drinking water standards of New Zealand, or perhaps it's an internal measurement criteria that they've decided to use. So as part of aligning the auditing standard more to the financial reporting standard, as I mentioned earlier, we worked really closely with the accounting team whilst revising the standard. And one area that we actually discussed heavily was the disclosure of the measurement basis or evaluation method used by an entity to measure or evaluate their service performance information. So the XRB accounting team have recently released guidance on this issue for preparers. So I wondered, Jamie, would you like now to tell us a bit more about this guidance?
Absolutely. Thanks, Lisa. Yes, so this guidance really has been issued in the context of disclosing more information about how you have measured your performance measures. And it really comes about in the context of the fact that there's this overarching principle within PBE FRS 48 to apply the qualitative characteristics when you're choosing what service performance information that you're reporting on. And the guidance is intended to help preparers thinking about what other information they might need to disclose about their performance measures in order to meet those qualitative characteristics. And there are 3 main ones to keep in mind when you're considering what service performance information to present and what additional information you might need. Those are faithful representation, understandability, and verifiability. So your service performance information must be unbiased, must report favorable and unfavorable aspects of the entity's service performance to be faithful, and users need to be able to understand why that's a good representation of your performance. And then understandability, already slightly alluded to, they should be able to understand what each measure is telling them, and how you've come to the conclusion, or how that measure has been measured itself. More complex measures and descriptions might require more disclosure to explain how you came to your conclusions. And finally, verifiability. It must be clear that the information that you're reporting on is able to be independently verified, and how someone might go about doing that, which often could require some disclosure of how that measure has been measured so they can understand the extent to which that could be checked. There is no hard and fast rule about how much you're going to need to disclose. It's going to be judgmental, and it really depends on how complex each measure is and the amount of judgment that was involved in using or applying that measurement. For some, the description of the measure itself is going to be sufficient. For example, the number of free lunches that you've provided or the number of native trees planted probably doesn't require much further explanation. But But then you'll have some others that are a little bit more complicated, and they might even be based on an external framework. The earlier example for water quality is a good one. So in order to understand that, you might need to disclose things like what framework or standards you've used to make that assessment, whether you performed that assessment yourself or whether someone else did it, any inputs, where did they come from, any assumptions that you've made or any judgments that you had to rely on, the evaluation criteria or the approach, and any other remaining uncertainties, if there's a tolerance range or it's a statistical model, something like that. And then more complex or bespoke measures are often going to require more disclosure to help the users understand them. In some cases, the information that you need to provide could be quite substantial, and you might not want to reproduce all of that in your report. In some cases, you can then choose to cross-reference from external information as long as it's already readily available to the users of your reports. So you could publish it on your website, or if it's published on someone else's website, you might be able to reference through to that. But this guidance is really intending to clarify that requirement and how it fits within the framework of service performance reporting. So that is a overview of that guidance in a nutshell. And I will hand you back to Lisa to continue.
Thanks, Jamie. And I note there's a link to the guidance there on the slide as well. So that's great for people who would like to go and have a read of that, which we encourage you to do. So you might be wondering how this fits in with NZAS1. Well, one of the requirements in NZAS1 Revised is whether the measurement basis or evaluation methods are available to users. And the standard outlines ways that this could be achieved, for example, publicly. For example, the published external framework on a website, which Jamie alluded to, through inclusion in a clear manner in the presentation of the service performance information, or by general understanding. And again, Jamie gave us an example of that. One I had is perhaps measuring time in hours. It's generally understood by people. So thanks, Jamie. So moving on to think about how the auditing standard fits into the full suite of standards. So NZAS1 Revised requires the auditor to apply the full suite of auditing standards and NZAS1 Revised when auditing service performance information. So what effectively happens is NZAS1 builds on the requirements of that full suite of auditing standards that are specific to service performance information. The nature of this work is that the audit of the financial statements and the audit of the service performance information are undertaken concurrently and not as separate engagements, because the work on one effectively informs the work on the other and they're naturally interconnected. So looking at planning. So when doing the planning for audit of containing service performance information, you really need to stop and pause. And this is a key change in that it was something that we really wanted to emphasize in the revised standard. Although it's still an audit of the general purpose financial report, which you're familiar with, the audit of service performance information will require you to take pause and think about what may be different to auditing service performance information versus financial. Now, I heard a really great analogy for this when I was working together with the advisory group, and I wanted to share it with you. What they said it was like going on holiday in Europe and you hire a car where they may drive on the other side of the road. So you know how to drive. You've probably been doing it instinctively for a number of years, but then suddenly you need to think about what side of the car do you even need to get in on? What direction is the oncoming traffic going to be coming when you're changing lanes, entering roundabouts, for example? You just need to stop and think about what you're doing rather than relying purely on your instinct. So why is this? Well, firstly, reporting requirements for service performance information is less prescribed than financial reporting, which may result in varied service performance reporting between similar entities in similar industries. So PBE IFRS 48 is principle-based to enable an entity to tell its story. So even entities who may appear similar and what and how they report may be in fact different. The nature of the service performance information is different to financial information. Therefore, there could be different types of systems where the information is going to come from, or different types of evidence that you may need to collect, or the ways that you collect the evidence for financial information might not be as reliable or as relevant as it is for service performance information. You may require different skills on your audit or engagement team. I cannot emphasize this next point enough, and that is the importance of obtaining a good understanding of the entity for audits of service performance information. Think about how you're going to obtain this understanding. Who are you going to speak to? What documents are you going to read? As these may be different to what you've done in the past for the audit of financial statements. And it's also good to think about the timing of this planning and the engagement with the entity. This is also an area we've emphasised more in the revised standard due to its importance, particularly if an entity is new to reporting service performance information. Engaging early to understand the process the entity has applied to determine what it will report is important. So the revised standard applies a two-step approach to auditing service performance information. And this is essentially the same as the extent standard NZAS1. However, we've reworded it using the different terminology we went over earlier. So these two steps are outlined on the standard. Firstly, you need to assess whether the information reported is appropriate and meaningful, and then assess whether the information fairly reflects the actual service performance and is not materially misstated. So essentially, the second step is the ticking and bashing bit that we're more familiar with as auditors. Step one, though, is where life differs from the audit of financial information, and that firstly, the auditor has to assess whether what has been reported is appropriate and meaningful. So this requires the auditor to have a good understanding of the entity in order to be able to apply their professional judgment in making this assessment. So before diving into step two, the auditor needs to think about what has been reported and does that align with the auditor's understanding of the entity and what it's important to users. So before we take a closer look at this two-step approach, let's do another poll. This time, I'd like to let me know, so of which of these below do you believe are characteristics of appropriate and meaningful service performance information?
Right, I'll end the poll. And I think people have been listening closely to you, Jamie, because you gave them a clue earlier on some of these. So we can see the leaders there are relevance, verifiability, and understandability. But I might hand back to you, Lisa, so we can go through what those qualitative characteristics are.
Great, thank you. So the auditor is required to evaluate whether service performance information is reported in accordance with the applicable financial reporting framework. The applicable financial reporting framework requires the entity to report service performance information that is appropriate and meaningful. And as I mentioned earlier, we have aligned with the financial reporting requirements, and the auditing standard also then requires the auditor to evaluate whether the information is appropriate and meaningful. So we haven't defined appropriate and meaningful in the auditing standard, as that comes from the financial reporting framework. The standard says that the application, so the accounting framework standard, says that the application of the qualitative characteristics that can be seen here on the screen and an appropriate balancing of pervasive constraints on information result in service performance information that is appropriate and appropriate and meaningful to users. Jamie, I know you touched on this earlier, but have you got anything else you'd like to add here?
Mainly, I just want to reinforce that preparers do need to be thinking about these qualitative characteristics and how their service performance information meets it. And in particular, they really need to focus on ensuring that the information that they're reporting is a faithful representation, it's understandable, and it's verifiable. Obviously, all of these qualitative characteristics are important, and it is a balancing act, but those three are going to be the most significant ones at this stage.
Great, thank you. So we can move on to the next slide, please, Bruce. That'd be great. Thank you. So service performance requirements, as we were saying, are less prescribed than financial information. So the reporting requirements enable the entity to determine how it selects, aggregates, measures, and presents its service performance information. And this may result in varied service performance reporting between similar entities and industries. Therefore, the auditor needs to evaluate if the information is reported is appropriate and meaningful. Remember, this is fundamentally the same as evaluating the suitability of criteria from extent NZAS1. So NZAS1 Revised takes the auditor through a number of factors to consider when making this evaluation. So some of these examples that are included are, does it relate to an element or aspect of service performance information that contributes significantly to the entity's core purpose? Is it likely to meet the needs of the intended users to make an informed assessment of the entity's service performance? Does it represent a neutral view, including both positive and negative significant aspects? Is the service performance report complete, or is it overly voluminous? In other words, is there a lot of clutter? Were intended users involved in the process to determine what the service performance information is to report? So the auditor may therefore benefit from early engagement with the entity to understand the entity's service performance process, so where it intends to report its service performance information, and discuss any issues that may arise in evaluating whether the information is appropriate and meaningful. It's more difficult to get to the end of the financial reporting period and for the auditor to disagree that the information is not appropriate and meaningful. So being able to have this discussion as early as possible is best. This evaluation, of course, includes a lot of professional judgment, and therefore it is important that the auditor has a deep understanding of the entity in order to be able to exercise this professional judgment. So looking at step 2, as I was saying earlier, is essentially the ticking and bashing part of the audit that you're going to be familiar with from your financial audits. As discussed, the reporting requirements enable an entity to determine how it measures its performance measure. Remember, the measuring of the measures. Therefore, the auditor needs to conclude whether the service performance information has been prepared in accordance with the measurement basis or evaluation methods selected by the entity. So like step 1, there may be some differences in step 2 compared to a financial audit. For example, the mix of procedures performed to obtain audit evidence on whether the service performance is materially misstated may be different to that performed for financial information. Or the systems may not be the traditional or as mature as the financial systems that you require, and this may require you to think a bit differently to obtain relevant and reliable audit evidence. This is particularly relevant for entities that haven't needed to previously report service performance information, but we'll take a closer look at evidence shortly. So looking on materiality now. So materiality is a key part of judgments made when auditing service performance information. So it was actually an area we spent a lot of time discussing when revising the standard. We really wanted to capture the various layers involved in the consideration of materiality and essentially walk the auditor through those layers using simplified language and examples to help ensure it was applied consistently. So some of these key layers can be seen here on the slide, and as we approached each aspect, we considered the language we used and was it capturing the essence of what was needed. So let's take a closer look at some of those layers. So use your understanding of the entity. It's really important as entity is telling its story. So you need to draw on your understanding of the entity, why it exists, what its purpose when considering materiality. The auditor's understanding of the entity is important to determine what are those significant elements or aspects of the entity's service performance information which is important to intended users. Understanding what elements or aspects are significant to users may therefore assist the auditor to focus their audit efforts and applying professional judgment when considering misstatements identified. The next layer is determine and document materiality considerations and/or materiality, determine the nature, timing, and extent of audit procedures, and to determine the auditor's tolerance for misstatement. So the basis for materiality will likely differ to financial statements due to the nature of service performance information, which may often be more qualitative than quantitative. So because of this, it's unlikely to be an overall materiality, as there's unlikely to be a common unit of account. Materiality may be expressed in terms of an appropriate unit for each element or aspect of service performance information, or for each performance measure or description. It may be possible to group similar performance measures or descriptions together and make materiality decisions together if they have that same unit of account. There may be measures that you can apply a percentage like you used to for financial audit, but then that could be a different percentage for each of the other measures. So materiality considerations determine the auditor's tolerance for a misstatement, and in some instances, that tolerance may be even zero. So materiality is applied when making the assessment of whether service performance information is appropriate and meaningful. So when you're looking at the overall picture of what the entity has reported, what is the story telling you? You need to be thinking about what is important to users and how this has been reflected in the information that's been reported. For example, what has the preparer emphasised? And using your professional judgment, is that appropriate? Has an area that's core of the entity's purpose been hidden away as the results perhaps weren't as the entity had hoped? Has information been included that is actually clouding the overall picture? Is the report cluttered with information that, whilst may be relevant, isn't really at the heart of what's important to users, and so important aspects of the entity's performance information gets lost? Is it complete? Is there a performance measure that is important to users but not included? Applying materiality to assess appropriate meaningful is a matter of professional judgment, and so it's likely to involve senior members of your audit team. You need to draw on your understanding of the entity and what is important to users in making these judgments. And of course, documenting these judgments is also really important. The auditor needs to consider misstatements both individually and collectively. So although individually a misstatement might not be material, when collectively they may amount to a misleading portrayal of the entity's service performance. Unlike a financial audit, the auditor will be unlikely to be able to aggregate these misstatements numerically. However, the auditor still needs to be able to form a conclusion as to whether any uncorrected misstatements are material individually or collectively. So here we've got some factors that the auditor may consider for materiality and the auditor's tolerance for error. So looking at that top one there, the proximity to the purpose. So how important is the element to achieving the entity's financial performance objectives? If it's focused on the entity's primary purpose, then the auditor may have less tolerance for error. Presentation. How's the service performance information been presented? For a performance measure that maybe has been given a full-page glossy in the annual report, the auditor may have less tolerance for error. The extent of interest. For example, does that service performance measure relate to a key stakeholder, such as the funder? Does the measure cause the funder to maybe increase or decrease their funding? There's economic, social, political, and environmental effects that may be considered. Is there a high level of wider societal interest? For example, the water quality example we gave earlier. When there's a significant risk to the public, the auditor may have a low tolerance. The number of persons affected. Or does that measure relate to a target, whether the target was previously disclosed or how close the target may impact the auditor's tolerance for error? For if the reported result is close to the target, the auditor may have a very low tolerance for error. So I just wanted to finish the materiality section with this slide. So when the advisory group was working on developing the revised standard, we spent a lot of time discussing materiality due to its complex nature and a real desire for the group to explain it as simply as possible. One person in the group said, well, practically, when I think about materiality for service performance information, I think about it like this. Which elements or aspects of service performance information are the most important to users? What are the material performance measures or descriptions in those significant elements? And then what's my tolerance for a misstatement for those material performance measures or descriptions? Now, I thought this was really succinct and a clear description of how to approach materiality. So it was included in the standard. And I also thought it was a good way to end this, to wrap up this section on materiality today. Excuse me. So moving on to audit evidence. As I was saying earlier in the presentation, when applying the auditing standard for service performance information, the auditor is also required to apply the full suite of auditing standards. So what this means is that the principles for the auditing standard for audit evidence, such as needing to design procedures to obtain sufficient appropriate audit evidence, and considering the relevance and reliability, are equally applicable when auditing service performance information. For service performance information, sufficient appropriate audit evidence is required to be obtained for the 3 layers of service performance information and whether they are appropriate and meaningful. And by the 3 layers, remember, I mean the elemental aspects of service performance information, the performance measures or descriptions, and the measurement basis or evaluation. Then, whether the performance measure or descriptions have been prepared in accordance with the entity's measurement basis or evaluation method, and then whether the performance measure or descriptions are not materially misstated. This evidence may differ from your financial statement audit evidence in that the mix of procedures, for example, may be different, or it may not come from the traditional systems that you're used to, or the sources of information may be different. Some performance measures may be able to be tied back through to work performed on the financial statements as the engagement is done concurrently. Or there may be relationships with the financial information and the service performance information that might provide, say, a sense check. For example, a movement in a revenue or expense line may provide a sense check for a reported activity level that you're seeing in the service performance information. These differences may impact what is relevant and reliable audit evidence. For example, the system supporting the information entities are reporting may not be as mature or as robust as financial systems. Or the nature of the service performance information may often be narrative, so the auditor may need to think differently to obtain relevant and reliable information. So I'd like to draw your attention to some international guidance that is available, which contains some useful guidance for auditing non-financial information. So in 2021, the International Audit and Assurance Standards Board, or the IAASB, issued some non-authoritative guidance on applying ISO 3000 revised and other extended external reporting. I know it's 3,000, but I really wanted to highlight this guidance to you as it covers a number of the differences I just mentioned when auditing non-financial information. I've included a link to where you can find this on the XRB website, and also on the right-hand side of your screen, there's a second document, and that includes some case studies that provide some practical application of the guidance when auditing non-financial information, which is covered in the guidance document. So Chapter 8 of the guidance is where it is on audit evidence and takes you through considerations in designing and performing procedures to obtain evidence and evaluating the evidence, such as the risk considerations and what evidence is needed to respond to those risks, the available sources of evidence and how the characteristics of their source may affect the persuasiveness of the evidence, and the design and performing the procedures, such as what will the procedure achieve and how much evidence will be obtained from which available sources, and what to consider when evaluating the sufficiency and appropriateness of the evidence obtained. Two case studies, there's a number of case studies there, but just two I thought I'd particularly bring to your attention, and they're case study 7 and 11. So case study 7 is on obtaining evidence where the reported service performance information uses information entered into a system by an employee. The case study takes you through considerations I just outlined. For example, when considering the various sources of evidence available, and the case study considers board minutes, media searches, patient complaints, lab result reports, and the reliability and sufficiency of those different sources. Case study 11, that looks at a situation where there were limited controls in a process, which resulted in a qualification. But options to improve the entity's systems and process are explored and may mean that appropriate evidence could be available for future audits. The last part of the standard that I wanted to mention briefly today is the report content. So firstly, looking at the opinion section, to reflect the two-step approach which we talked about today required from an audit of service performance information, the opinion paragraph opines on whether the service performance information is appropriate and meaningful, whether it's been prepared in accordance with the entity's measurement basis or evaluation method, and in accordance with the applicable financial reporting framework. And secondly, just looking at key audit matters, when we consulted on the exposure draft, we actually received feedback that the requirement in relation to key audit matters implied that when CAMs are required or voluntarily reported, there would always be a need for one for service performance information. So this was not our intention. So I just wanted to bring your attention that we've redrafted this paragraph to be clearer that if CAMs are reported and in the auditor's professional judgment, service performance related matters were of most significance in the audit, then key audit matters shall include matters related to service performance information. So to support the implementation of the standard, we're developing guidance in the form of some frequently asked questions. So the first one is currently available on our website, and I spoke about it a bit earlier, and it's covering the transition options I spoke of. So if there's any other areas of guidance you'd like us to consider or focus our work efforts in this, please feel free to drop those in the chat today. And lastly, just before I go, as some of the entities you audit for service performance information may be classified as less complex entities, I'd just like to let you know that we're currently seeking feedback on whether New Zealand should adopt the international standard on auditing for less complex entities, and if so, for which audits. So the link for the survey is on the screen, and my colleague Bruce, who's helping run the slides today, who's a great guy, looking after this project, so he would really appreciate you taking the time to complete the survey. He tells me it should only take you about 10 minutes to complete. So the survey closes at 5 p.m. on Friday, the 22nd of September, and this is just next week. So if you could do that would be wonderful. Thank you. Right. That's the end of the presentation. Misha, have we had any questions come through while I've been talking non-stop?
No. Thank you, Lisa. That was a really, really comprehensive walk through our standard. I'll give people a few minutes just to think about whether they do have any questions. If you wanted to drop those in the chat or in the Q&A function, we've got a few minutes, so we'll do our best to answer any questions that you do have. While you're thinking, if you don't have any questions, maybe you can take the 10 minutes and complete the survey.
Bruce would be a happy man.
Not seeing any questions coming through, so I think you've done a really good job at either confusing everybody or such a wonderful job that no one has any questions at all, Lisa, so well done. If you do have any observations or questions, you've got our email address there on the screen. Oh, that happened to me when I did the GHG one as well. As soon as I threatened to close the session, people start giving us questions. So the question coming through here is, how much should we focus on auditing service performance information rather than financial statements?
Well, they're done concurrently, and so I would have thought equal emphasis, if not, depending on the entity, you might be placing more emphasis on the service performance information, particularly when it's new. There might be a lot more to be thinking about and in your planning and things like that. Misha, have you got anything you'd like to add to that?
Yeah, I don't think we can give you a answer to the question really. It's you're forming an opinion over the financial report, which includes a range of information, and you have to gather enough evidence to reach a reasonable conclusion on all of that information. So I think your work effort, it all goes down to gathering enough evidence to reach a reasonable assurance opinion over the information that's reported based on your materiality judgments. So yeah, I don't think we can really give you an answer, you focus 90% here and 10% there. It doesn't really work that way. Another question coming through is, will the slides be shared? Absolutely. We will email a copy of these out following today, as well as posting them on our website. So you're able to get both the slides and a recording of the event. Question coming through, are we seeing any good examples of statement of service performance in the marketplace? I think we've got a lot of different examples. I don't know, Jamie, if you've got any that spring to mind, or if the accounting team are sort of monitoring those.
We are in the process of gathering up reports for the first year. I mean, we're looking at registered charities in particular, because they're required to do it for the financial year ended 31 December 22. And so they would have filed in June. So we're just starting to see those come through. And we are looking at those. But there are some really good examples for people that have early adopted, and those actually can be seen through the Charity Reporting Awards. There are a couple there, like Fred Hollow's Foundation, the Royal New Zealand Ballet, are great ones to look at. We actually did a conversation with them, which is available on our YouTube channel as well. So yeah, there are definitely some good examples out there, and there are going to be plenty more to come.
Awesome, thank you, Jamie. Another question coming through, are statement of service performance typically included in the financial report with other statements, such as the financial position, etc., or are they done separately? That's a really, really good question. It goes fundamentally to the heart of the scope of the audit as well. So the clue is in the title. It's PBFRS 48. It is a financial reporting standard. And therefore, it is actually an integral part of the financial statements under law. It's another statement that is just part of the same report that you have to prepare in accordance with XRB's accounting standards. The extent to which it's actually subject to audit, well, if there is a legal requirement to have the financial statements audited, it is inclusive of that statement of service performance, because by definition, that statement is an integral part of that financial report under the law. I don't know if Lisa or Jamie, you've got any comments to add?
I'll just add that you'll actually see that same sentiment reflected in PB IPSAS 1, which is what sets out the content and form of financial statements or a financial report, and it says that service performance reporting, or a statement of service performance, is a component of a complete general purpose financial report. And so that very clearly captures it all together.
Thank you, Jamie. Anything from you, Lisa?
No, nothing further to add there.
Cool. So there's another question there about some auditors excluding service performance from the scope of the auditor. I think that might come down to depending on which tier and also the legal requirements attached to whether an audit is required or not. So, for example, tier 4 entities aren't required under the Act to have any assurance. And in that instance, you might have a variety of practice coming through, because ultimately people are opting in to an audit, and they can opt to have the balance sheet or one balance or the full report assured. So there could be a range of things happening where the financial report is not required under the law to be assured. So I can't comment that the practice is what the practice is, if it's right or wrong. It will depend on whether there's a legal requirement to have assurance. There is, then you're in. If you're not, then you can scope the audit as you wish, I think would be my response to that question. Any other comments on that one?
Captured it.
Right, these coming through thick and fast, so I'm trying to keep up. Oh, there's a nice comment. Thank you very much for the great presentation. Thank you, Roy. We appreciate the feedback. Is the standard going to be applicable for incorporated societies that are not registered charities that previously prepared special purpose accounts? That one I might have to rely on you, Jamie, because I think it's more related to a preparation. If you don't know, we'll have to take it away and think about it.
No, we do. So yes, incorporated societies under the new Act over a certain size threshold are going to be required to follow XRB accounting standards. And they have also recently issued some regulations which specify which entities are required to have an audit. And so the entities that are over that size threshold, from memory, it's about 3 million, they will be required to both prepare and have their service performance information audited. So yes, is the answer for some, not all.
Super, thank you. And I think there is another question around. So the question here is, what is the extent of procedures to be performed to obtain sufficient evidence? Well, isn't that the golden question? That's up to the professional judgment of the auditor to determine when is enough. And I think, Lisa, you've covered some sort of case studies which might provide a bit of guidance around thinking that through. The other question related to that is there any sampling guidance available? I think my reaction, so I don't know if you've got any thoughts on that one, Lisa, but my reaction to that would be my first port of call would be to go to the sampling standard, because just like Lisa said, you're actually just using the ISA requirements and then tailoring them for the service performance information. There might be some sampling case studies. I'm not sure that we are aware of any, but we'll have a hunt around and maybe we can include something if we find anything on that one. Don't know if you've got any other comments on that.
No, but just that you're right. You've got to apply the full suite of standards, so that's where I'd be looking first for that. And yeah, those case studies, each case study, I think there was about 12 or so, and they tend to cover different topics. So there may be one in there that looks at sampling, but Not that I couldn't tell you which one at the top of my head. Sorry if there is one, but I'll take a look for you. Yep.
Great. So you have all done incredibly well to last a full hour with us. I think our time is up for today. Thank you very much to both of our presenters, Lisa and Jamie. You've done a great job today. I hope you've all found today's session really informative. And yep, keep in touch with us through following us on LinkedIn or drop us any emails if you have any other thoughts. Thank you very much and enjoy your afternoon.